Hello, Aaron Indus here, your loan pro from Denver, Colorado, with another episode of How Much Mortgage Can I Afford? Here at the beginning of 2018, we've already seen a substantial increase to interest rates, and a couple folks have reached out and asked why that's happening. So I'm going to give you a little bit of an overview on why interest rates are rising at the beginning of this year. As always, if you like the information you're receiving, if you're a home buyer looking to purchase in 2018, make sure you like, subscribe, and follow. Do what you need to keep receiving episodes every week. It is a weekly series. Otherwise, sit back, relax, enjoy this episode of How Much Mortgage Can I Afford? Well, thanks again for joining me for another episode of How Much Mortgage Can I Afford? Today we're going to be talking about rates and answer two questions. Is it normal for them to be going up right now? And then why are they going up? So we'll jump right in there. Number one, is it normal? Yes, this is normal. Actually, going back to 2014, 15, 16, 17, you look at those 4 years, all 14, 16, and 17 all had increases, 15 did not. The reason 2015 didn't was because FHA actually changed their mortgage insurance premiums. They went from 1.35% annually to 0.85%. Big drop. And with that drop, it saved a lot of people money. So we saw a lot of folks jump into the mortgage market to buy homes because it was now instantly more affordable, as well as refinance because they wanted to lower their payments. So this is a normal trend for the year. But the second thing that's going on there is, why are they moving up so fast? And that's a separate reason. Let's just talk about the economy as a whole. It's doing great. All the signals are pointing to good consumer confidence, good retail spending, and after all, you and me spending our dollars at the stores, online, at Amazon, at Walmart, you name it, that is what drives our economy, and we're spending that money. Okay, so how does that drop in? Well, first let's look at the tax bill. We do know that tax reform went through. We do know that everyone's going to be saving some money on taxes. With that being said, what you want to understand is that it temporarily increases our deficit. We know that it is going to add 1.5 trillion to the deficit. The idea is that by giving more money to the consumer through these tax breaks, it going through corporations, them giving pay raises, which a lot of companies have already gave bonuses and pay increases based on the tax breaks, that money will eventually get into the economy. As it gets into the economy, taxes are going to be spent on additional profitability, goes back to the government, and they view that they're going to make way more than 1.5 trillion of what they're increasing the deficit by waiving those taxes. Now, all that aside, how's that apply to mortgages? Simple. Mortgages are competing on bonds. Bonds are debts that we issue as America. In order to pay for this, we have to borrow the money. We borrow the money from corporations and countries around the world. So that money is going to be issued through a treasury. When you hear anyone talk about treasuries and they're in terms of years, a 2-year, a 3-year, a 5-year, a 7, a 10, a 30-year treasury, what those are debts that are paid out over that term. It is just like a car loan at 2, 3, 5, 7 years. We are giving loans and guaranteeing an interest rate. Well, when you keep issuing additional debts, you have to sweeten the deal. People don't want to buy it unless you offer a better interest rate. Well, if you offer a better interest rate, that comes back to the U.S. consumer as costing more. That's how it works. Okay, so that's number one on why we're seeing it. Number two, the Federal Reserve. We have the Federal Reserve is the central bank of America who actually makes sure that we have money for all our big banks, your Wells Fargo's, your Chase, your Cities, to borrow and lend. Okay? Sometimes they need liquidity, so they borrow it from the U.S. government, and we charge an interest rate. Now, they in turn are lending money, and they charge interest rates for not only profit, but that kind of coexist with what the Federal Reserve is charging. Before I go too far down that rabbit hole, here's what it comes down to. Is as the Federal Reserve sees us starting to have supply and demand issues, meaning inflation, we are starting to mark up costs of goods and services because we have a shortage, then they need to start raising the interest rates. Now, what you would say is, why does that work? It just costs everyone more money. Well, because as you raise interest rates, you naturally start to take people out from needing those goods and services. A certain percentage of people who are looking at cars to purchase, or an ATV, or a motorcycle, may decide not to if the payment threshold went up a certain amount because interest rates went up. Okay? So they're tailoring the economy to keep going strong without letting it go so hot that we have a bubble. So between those two items, that's why we're seeing interest rates rise. So what's the answer for someone out there looking? Well, the reality is this looks to be a couple-year run. We're already a decade into a recovery, and there looks to be several more years in this recovery. So rates are going to keep going up. In fact, the Federal Reserve sets out a little chart called a dot plot, and on the dot plot they put where they want rates to be. It's an estimate, and it's just kind of talking about the tone of interest rates in America, and everything is saying they're going up. So if you are a consumer out there looking at interest rates going, I think they're going to come down, I would not hold your breath. In fact, I think we're going to see rates continue to rise for most of 2018. Small pockets of it going down from time to time, but overall the tone is set for them to increase. So the answer is, if you would like to get into a house, the sooner you can, the better off you are, the better the chances are you're going to have a lower interest rate to the market. As always, if you're looking to finance a property, please consider myself and my team as a good option. We love what we do right here in Denver, and we'll certainly help you through that process. Otherwise, I hope this episode explains a little bit more of why interest rates are rising at this time. And as additional stories or news comes out, I'll do another episode and explain kind of what we're going through. Enjoyed this episode of How Much Mortgage Can I Afford? And we'll see you on another installment.